I'm looking at these levels for both a long and a short on Bitcoin and Ethereum. Let's go to the charts. So Bitcoin on the 4 hour, we are still a little bit on the downside. We're still in this area. So the long has the, how do you call it? The long has the favor to play. So let's zoom in a little bit. Locally, I'm interested in these areas. Here for the short and here for the longs. So let's zoom in a little bit more. There's some nice liquidity right here, also right here, and also here. So interested for a long, interested in a long, interested in a short. Where do we wait for the trigger? Much easier, guys. So we want to see something like this, lose it, activate, bam, short. Same here, go here, long. Same here, long. So it looks easy. It is easy. You just go to watch those levels, play the short, play the long. You can catch them. You can catch the long right here. So for example, there's a lot of wicks. I don't like wicks because it means this liquidity is already gone here and here. This is fine. You can catch this in my opinion. So let's remove the boxes. Let's show exactly what will be a nice entry. Around here, target here, stop loss. I would put my stop loss beneath this level. 4.25, that's nice. So this long. Long right here. Why here? Because of this liquidity. Also here. Maybe a little bit higher because I see this right here. So stop loss again. I will put it in the wick. Yeah, that's fine. Target. Same target. Nice risk to reward ratio. So for the short. Right here. Because of this. Or we can go for the liquidity all the way up. Stop loss. Around here. Target. Around here. These are some nice plays. All those have a nice risk to reward ratio. Also a short can be played right here. Here. It's very easy to find a setup, guys. It's very easy, but if you don't want to catch it like immediately, just place the order but wait for confirmation. You just wait until, for example, here you wait until the price gets here. Wait for something like this. Lose it. This is lost and enter here. So you have more confirmation because that's the first sign that we go down. So you can put your stop tighter and the reward is the same. So you have a better risk to reward. You have more you have a potential more safe play. The only thing is you won't get filled in the wick. So for example, again, another example, if the price does something like this and we get a wick, bam, you won't get filled if you don't catch it. So it's up to you. What I like to do is catch the trade like 10 times, 50 times, 100 times, and do it in the price. So when the price develops, what I just taught you, and just document the trades and see what works for you. Because I might be a trader that likes to catch, but you might be a trader that loves to wait for the confirmation to occur in price. So that's all up to you. So remove everything. Let's go a little bit more local, smaller time frame, because there's also happening some interesting things right there. So let's go to the 3 minutes. We see a nice little uptrend, but we lose momentum. What I like to do is search for the liquidity right here. So this is a lower time frame scalp, but it can go into a day trade if we go to the high levels. I would actually still target around 98k. So what would I do here? Long position right here. We might already have the front run. Stop loss down there. Target. Let's target for now this. But we know in the back of our head that the ultimate target is somewhere here. That's a very nice risk to reward, guys. So it's interesting to pay attention and just put the trades in and just make money. And if you are not a trader and learning, do it for the experience, do it for the knowledge, do it for the documentation, because you have to put in the trades before you are a trader. You cannot be a trader with less than 100 or 200 trades. You have to do 1,000. So if you are uncomfortable, just play it 1% risk. 1% risk. If you are uncertain about the trade or insecure, do 0.5%, but aim for that 0.5% or 1% and just put out on trades. With $1,000, you can do unlimited 1% risk trades, because if you lose a lot, the risk gets lower because it stays 1%. So if you start with 1,000, 1% is 10. But if you lose it all and you are not doing great and you're at 500, you only lose 5. So, I mean, just do it. I recommend always using real money. Never use paper money because you need to get experience about how you handle the emotions. That's a really important aspect of trading, of course. Quick look at Ethereum. Ethereum is stronger. I'm only going to show Ethereum on the a little bit higher time frame. We are in the box right here. This is the range. If we break above the range like this, I will look somewhere here for a long position. And where am I going to look for a long position? I don't know yet, because I don't know if we break out now or we stay here. I don't even know if we break out on the upside. But you tell me, why are you do you want to go long when we go higher? Well, I want to play the pullback. The volume is in the middle right here. I'm going to put a horizontal line here. That's where the most volume is. Let's go to the lower time frame. Do we see something here? I don't know. Maybe it's a little bit too low. So if we break out here like this, you can go long here, long here, long here, long here, maybe even here. Pick one. Just pick one that suits you. Try it, document it, see if it works. It also depends on the price action. If we get a very strong gain, and the market sentiment is very strong, maybe go for the aggressive one. But if the gain is a little bit weaker, let's say it goes like this and it grinds like this, maybe you can go more defensive. And if we reject, so we stay here, you can always go back down. There's always some liquidity around here. You can go long there. Am I looking for the short? No, I'm not currently looking for the short. Can we play the short? Yes, we can always play the short because you can always go long and you always go short. What do we want to see for short? I think the short, I want some liquidity, so go above here. Not gain it, just wick in here, go down, do something like this, and yeah. Short it. But I'm more interested in the long because there's just more potential upside. So yeah, that's about it. That's Ethereum, that's Bitcoin. Put in the trade, document it. So how do you document it? Just open another chart, for example, this chart. So let's say you go short here. What I like to do is put an arrow. Green arrow is a good trade, red arrow is a bad trade, and just do it like this. What you played, what happened, do it for every trade. And if you put out a lot, you can just zoom out and you can instantly see what worked and what didn't work, what you have to work on. Are you too aggressive? Are you too defensive? Are you only getting 1 TP? You can add a little note, or just you have a visual order book that's really helpful. You don't have to put everything in Excel, type everything out because you don't know. You don't have the visual of the chart with it. You need that, guys. So this is Bitcoin. This is Ethereum. I'm still interested in buying Ethereum because we are on the bottom of the range. I'm also interested here to buy some spot. If we lose it, grab a little liquidity, go back up. I'm just playing what I see, guys. I have no bias. If we go down, yeah, sure, I buy some more. If we go up, yeah, I sell some. This is what you do, guys. Don't have a bias, go up or down. And if you have a bias, just invert the chart, guys. Just invert it. Change the colors maybe to regular colors like white and blue. And you don't have a bias. Just invert the chart and make them play so you don't always want to aim for the long or the short if you're a bear. So thanks for watching, guys. If you liked this content, make sure to leave a like, comment if you have a question, and please subscribe. It will help the channel grow. If you don't like it, just dislike it and let me know what you didn't like. Okay, guys? Bye-bye.